Gem International is a new diamond explorer in the richest diamond-producing country in Africa, located next to the fourth largest producing diamond mine in the world. International Spotlight is on an 1109-carat diamond recently discovered in Africa by a fellow Canadian junior with a proven operator and finance team. Gem International trades on the TSX Venture Exchange, symbol GI. Visit us at gemdiamondmining.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Rick Ackerman, editor of the newsletter Rick's Picks, his website, rickackerman.com. Welcome back to the show, Rick.
Always a pleasure, Jim.
People are wondering, with equity markets trading sideways, it seems, forever, what can you do to pick up your portfolio?
Well, not sideways today. We've had some interesting movement in the E-mini S&Ps. They're getting whacked pretty good today, and they've come down to a pretty key support within a tick of it. The actual number is 2131.50, and if it cracks that number, I think we're going to see a plunge to 2090. That will be equivalent to about 350 Dow points. But as far as I'm concerned, that may be where the fireworks start.
So is this finally the crack in the market that so many people have been warning about?
I think so. And of course, you always temper that opinion with a little bit of reserve, simply because we've seen this bull market go against logic since March of 2009. But I think the accretion of negatives has reached the point where, well, from my perspective, it's good to be shorting into virtually every rally. So that's what we've been doing. And I guess if you had to summarize the negatives in one very significant chunk, you might simply look at S&P 500 earnings. Some of the biggest companies in the world are about to report out a sixth straight quarter of declining earnings. And, of course, with the market trading at record highs, there's a little bit of a disconnect there.
Is the big reason for U.S. declining earnings the high value of the U.S. dollar?
Well, that's certainly a big factor. And, someone asked me today about, there was a fairly well-known forecaster out there who said the dollar is in for trouble. But this woman is obviously not a chart reader, because if you look at a chart of the dollar index, it looks like it's ready to scream. Even if not, you can see no worse than a consolidation in the dollar. Dollar index currently trading around 97 or so, and I think it's headed up to 120. So if it does, that would correspond to epic deflation, which is what I'm certain we're in for.
Now, how does that affect the Canadian loonie?
Well, Canada is in worse shape than the U.S. We're in the midst of a major bear market in commodities, and the Canadian currency is, of course, tied to the resource-based economy of Canada. So you have a real problem there with the Canadian money following commodities all the way down. So, but on the other hand, I don't think Canadian banks have loaned as frivolously into an inflated housing market as U.S. banks have. Even though, yes, if you you couldn't tell that if you live in Vancouver.
Well, yeah. Although Vancouver prices have been falling since last February, and the bubble the government has tried to, pop with their foreign buyer tax and now putting on very stringent mortgage measures, I don't think was really necessary.
Well, you know how heavily that Vancouver market is fed by money fleeing China, and the problem there is that the source is about to get kneecapped, because China has built themselves a bubble that exceeds even that we see in the U.S. And Canada, and it's not just housing. Housing's a big part of it, but there has been so much speculation in Chinese apartment dwellings and other types of residential construction that that they're going to be seriously wounded by the build it and they won't come factor. China has geared up for major domestic changes in domestic spending, but to get there, they kind of seeded a capital investment boom that went far beyond demand. It would take a burgeoning middle class in China to absorb all of the output of these ghost cities that they built. So China is in the throes of a huge collapse, and it's going to have consequences for real estate on the west coast of U.S. and Canada.
Well, also, too, with China, with their huge bubble and these artificial cities, the Chinese have ignored their own psychology. Chinese people like to be around other people. Who wants to move into a ghost city?
Well, James Rickards, the economist, fleshed it out really well. The idea that if you build an office here and you say this office is going to be where research and development takes place for China's high-tech future, it turns out that if you put the building there, you need essentially the organic links to universities that produce engineers and scientists to fill those buildings. So merely having built the cities will not necessarily fill them with economically productive activity.
Well, also, you need a reason for the city to be there. We understand in North America, in Europe, wherever a city is, and in Asia, it's usually on a river. You can move goods by ship or barge, that kind of thing. These places are just put in the middle of nowhere where there's no natural resources to exploit, where there's no brain power to exploit.
Right, and it's interesting. The migration is actually starting to go the other way, where frustrated job seekers are trying to return to the hinterlands, but of course they've been to some extent paved over, and you've had agribusiness come in and take over a lot of smaller farms in the interior of China. So they're really you really can't go home. And what surprised me most, this comes through very clearly in Rickard's book, is the number of these ghost cities that have been built. He takes, I think, the Nanking, and he shows you with concentric rings how many scores of big cities have been built where they're still waiting for for productivity to arrive.
Well, I know in Guangzhou, one of the major cities in China that you don't hear a lot about here, but there they know how important it is. They had a riot over real estate. They literally pushed over the wall of a display office trying to get inside to find bargains for their latest condo development. So they're still hot on real estate, but they want it in the places where they already live.
And the bubble is somewhat different from in the U.S., where we get a lot of speculative buying that's hugely leveraged. You know that you can buy a house with very little down. In China, the rules are different. A lot of these owners of speculative living spaces they're all in, as deep as Chinese savings go. And they save something like, it's over 30% of their income. They're all in with cash for these speculative units.
Well, the Canadian government has now made it mandatory for provinces to institute carbon taxes that at the end will add an extra 12.5 cents a liter or about 50 cents a gallon to the price of gasoline over the next 5 years. Does that help an economy?
Well, I think that that Canada is sort of misconstruing how that happened in Europe. In the U.S. too, there's a lot of carbon taxers who say, look, Europe does fine, but of course the huge taxes that have been incorporated in the price of gasoline have they've happened organically over a long period of time. But if you simply and you might say the same thing about healthcare. Socialized healthcare has over decades been sort of socialized into the system. The system has absorbed the impact. But so when the U.S. looks at the European healthcare model and says single payer, we would be superimposing that on a system whose costs are already well out of control. So the same thing with the carbon tax. You can't just kind of put it there all at once, or even over 5 or 10 years. It has to come very slowly, or the impact is hugely deflationary.
Well, BC has had a carbon tax now for, I would say 7-8 years, and I haven't seen any change in gasoline consumption, which it's supposed to help curb. And the tax itself has gone to billionaires to plant trees where we don't know.
Yeah, and ideally it would go toward infrastructure. That's sort of a code word for those who would try to raise money for new roads through additional taxes. The problem is that we've reached the point where any bonded indebtedness goes toward paying pension and health care benefits of people who have worked in government or in, specifically here in jobs that connect to the transport sector. So, you're in a situation where, and this is, it's systemic, even in the education system. If California floats a $500 million education bond, it doesn't buy much more education at the margin. What it does is essentially shore up pension systems. So the U.S. is in a position of barely being able to keep up with maintenance of its roads, let alone building new ones.
Well, here in British Columbia, people are saying if you're going to have a carbon tax, why doesn't it go to transit that gets people out of their cars at least? And the government refuses to do it, saying we don't want a targeted tax.
Well, it's hard to retrofit an efficient transit system on one that's as inefficient as the one we have. You get on the roads here in Colorado, and every car is just there's just a driver, and that's it. And it's been kind of the problem has been somewhat masked because we have a trend now where we've got public-private partnerships to build roads, and in Colorado, that just resulted in an additional lane being added to the main link between Boulder and Denver, about 28 miles. From the Colorado standpoint, they were able to sell the public a bill of goods, but in fact, the road has a toll over that short link that amounts to, it's almost $30 for the round trip. It's the most expensive toll road I know, and they call it the Lexus lane here. And the question is, haven't we been taxed enough to build roads that would be free? This particular link, Highway 36, was a toll road until the 60s, and then it became free. And here we are, quote unquote, improving it, but only to the extent that that we've got at present a lane that's mostly unused because it's so expensive. And over time, the reason for the road wasn't so much to improve public transportation or improve the highway. It was the result of a bunch of guys at Goldman sitting around thinking, what can we do in a big way that will generate the kind of returns that would service an 8% bond for the next 50 years. So the toll road was a perfect answer to that, and a lot of states and the states in particular are strapped for road funds, so they go for the deal with Goldman, and we have a toll road in place of something that was free.
Well, the phenomena we have here in the Vancouver area is the Golden Ears Bridge and the Port Mann. The Port Mann Bridge, by the way, is the widest bridge in the world. It's 65 meters. It has 10 lanes, but it's a toll bridge, and everybody avoids it as much as possible. Well,
it's going to be even more of a problem when we go into recession, and I don't know what the toll is there, but the $28 round trip between Boulder and Denver is going to become prohibitive. But again, the driving force, the thing that impelled the construction of that road was not a traffic problem. It was Goldman's need to have to cover the long end of the yield curve at 8% returns.
Well, this is again a P3 private public bridge. And there's also complaints about the billing system. I've run into it. I got a bill saying I crossed the bridge twice one way and once the other way at exactly the same time, and they have yet to refund my money.
Good luck. You know, you talk about fighting City Hall. You're in the middle of a bleak house there. It's I did the same thing happened to me. I was in the Bay Area last week, and it's a little bit confusing. You know, if you try to loop the whole Bay Area, essentially start in San Francisco, go over the Golden Gate Bridge, head east to 80, come down the corridor there on I-80, and then back into San Francisco on the Oakland Bay Bridge. I can't remember which way, clockwise or counterclockwise, the tolls are collected, but in some places it's a cash toll on the Richmond-San Rafael Bridge, but on the Golden Gate Bridge, I hadn't been there in a while, they don't collect a cash toll at all. So I was driving a car that had a transponder in it and had no idea what the bill would be until it arrived in the mail. So, you know, it's the revenues, though, have fallen short of, well, when you look at the results, they just built a new, they replaced this part of the Oakland Bay Bridge, and engineers are not what they used to be, evidently, and some of the key supporting members of that bridge were not properly, I think it was huge nuts and bolts that weren't coated with zinc and embedded in millions of tons of concrete. They've begun to corrode, creating a structural problem for the bridge, an enormous one, almost to the point where, you know, they were talking about taking this hugely expensive brand new span and taking it down and putting up a new one.
We'll have more with Rick Ackerman right after the break.
I'm Larry Ray, President and CEO of American Manganese, Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Welcome back. We're speaking with Rick Ackerman. Rick, why is it when we have big government projects, new highways and so on, again in the Vancouver area, they just opened an outlet mall, but they forgot to build enough exits to get out of the mall and back onto the highway. And so people are trapped sometimes for hours trying to leave.
Well, there's an interesting, but I think very logical reason for that, and that is that the civic engineers and lawyers, they're outgunned by the developers, and the developers come in and say, we're going to build this whole city within a city, and the developers don't too much care about whether, or they don't care enough how to get people in and out of those, those commercial clusters or residential areas. That's happening right in my backyard. They're building along this Highway 36 corridor something called Town Center with 1,400 units. And this has been talked about for a few years, but I've seen no reports in the paper about how traffic is going to get in and out of that neighborhood. So the developers come in, and all they care about is just building lots of stuff, and they don't really they don't think it through from the standpoint of how you're going to move traffic, or even how the traffic will regulate itself within the enclave. So the developers are driven to simply build, and the localities, which would look closely at the specifications and decide what'll work and what won't, they're outgunned. They just they don't know the right questions to ask. So things get built, and they don't work.
Well, again, with this new outlet mall, there's no rapid transit to it. In the rest of the lower mainland, it's true if you build a rapid transit line, people will come. The first rapid transit line, the Expo line, built in 1986 for Expo. All along it, near every station, is a huge cluster of high-rise apartments and shopping centers. Why would you build one of the biggest malls in a province and not have good public transit? Apparently, the only bus goes there, leaves once an hour or once every half an hour.
Well, we've got a much bigger boondoggle going on in California with the construction of the bullet train between two places that don't have much between them. They're really in the interior of California, and the idea was that eventually it will link down to L.A. You'll be able to go from San Francisco to L.A., but we're nowhere near being able to absorb the cost of this, let's call it an experimental transit link. And ultimately, you find that you built something that's so expensive that whatever the cost of having people go single passenger in their cars from one place to another, it's much less than the $150 subsidized ride between almost somewhere and nowhere.
Well, yeah, we do have a subsidized line as well, the West Coast Express, where the subsidy amounts to a brand new Hyundai for each passenger a year.
That sounds about right. I remember when New York was upgrading its transit system for handicap access, someone calculated that if you simply took the money that was going to go into that project, parked it at 4%, it would provide $6,000 per capita for cab rides. So, not that anybody would look at it that way in the planning stage.
Of course, and our provincial government has made no provision for rapid transit to go over our two largest bridges into the suburbs.
Well, that's interesting. At least I can say with respect to BART and the San Francisco Bay Area, you get a part of the ride is is on the Oakland Bay Bridge, or actually under it, but they used essentially bridge infrastructure to hang BART on.
Now, taking a look at something that might make money for you, what's the prospect for gold since it's been falling quite a bit lately?
Well, I'm bullish on gold, but perhaps not as bullish quite as my own subscribers. I never bought into the $5,000 an ounce scenario, let alone the 50,000 as some seers out there have projected. But I do think that whatever happens, and I strongly believe that we're going into a deflationary implosion. That's not exactly bullish for gold, but when the dust settles, I think that gold will hold its purchasing power relative to just about any other class of investables you can think of.
Russia says it supports OPEC's plan to either freeze production or maybe reduce it a bit. Would that be enough to keep oil prices up around $50 a barrel?
No, I think oil is topping here, and it's headed back down into the low 30s or high 20s, or even lower. And, when you hear a story, a bullish story being spun concerning crude going higher, you have to consider how desperate so many large investors are for higher oil prices. After the real estate induced collapse of 2007, 2008, a lot of the money went into the energy sector, so higher crude oil prices are absolutely essential to keep the global financial system solvent. And the problem with the story is that, it'd be one thing if the bullish story were fabricated or on the idea that demand is increasing. That is a true bullish story for crude, that the global economy is burgeoning or about to burgeon, and there's going to be huge demand, extra demand at the margin for energy. But the opposite is true. We've got China slipping into a state of economic implosion, and China, of course, is the biggest buyer of energy at the margin. So the story just it won't wash. You can't push oil prices higher. You can't even sustain them at $50 a barrel with the story that supply might be curtailed. The idea that Nigeria will pump even less, crude, and that Venezuela will throttle its output. But when you look at it, even the biggest swing producer is Saudi Arabia, and it's hard to imagine them as being desperate. But Saudi Arabia has enacted very severe budget constraints simply because they're not generating enough revenues from oil sales to pay for the lavish lifestyles that they've become habituated to over time. So with all these swing producers, Iran in the area of natural gas, the supply is going to force all producers who are strapped to keep pumping. And one huge source of natural gas is Israel's find just off its coast. And the surprising thing is they're discovering that they don't have any market for it. There's 100 zillion cubic feet of natural gas that they can get at, but they can't get it to anyone who really needs it. There's Israel was talking about a pipeline deal that went through Turkey. Turkey would essentially sell Israeli produced gas to Europe, but it turns out that Germany and a few other countries don't want to do business. They don't want to be buying their natural gas from Turkey, mainly because of the political turn of events in Turkey. Things are going on there that are not to Europe's liking as far as freedom of the press and the dictatorship that exists there now. So, from that one source of supply alone into an already oversupplied market in natural gas, we've got a huge surplus looming.
Rick, 10 years ago, could people imagine that we would have too much oil and too much natural gas?
Well, if so, they didn't imagine that the world could ever slip into something like a state of recession. Even putting that aside, the idea of peak oil has been pretty much discredited. For all the oils, the big fields that we use up, additional ones are getting discovered, and it's even during periods of relatively low exploration activity that these fields are being identified. So there's no immediate threat as far as the supply goes.
Plus, in Saudi Arabia, some of the oil areas that were depleted back in the 40s and 50s now have oil again. Maybe it's not a fossil fuel. Maybe it just naturally forms underneath the earth.
Right, and they, of course, they didn't foresee the technology of fracking. We're extracting a lot of crude and natural gas in ways that couldn't be foreseen back then. So the same holds true for Saudi Arabia. Oil that they couldn't have gotten at 40 years ago is seemingly an infinite supply now.
Plus, now, of course, with alternative energy being available, General Electric is spending $1.65 billion to buy a wind farm in Denmark. Do these big companies see an end to big oil?
Well, I think they ought to take to heart what Germany's experience. Germany was probably as committed to alternative energy, particularly wind power, as any country on earth, and yet the Germans are pulling back. They recognize that it's enormously expensive to put up wind farms, especially offshore, and that's a problem for the U.S. as well. When we talk about locating wind farms so that they can service power needs along the eastern seaboard, the wind farms would necessarily be located offshore. And when you factor in the maintenance costs for offshore wind generation, it winds up being hugely expensive. That's not to say that we couldn't have some sort of technological breakthrough on power storage, batteries, and on solar power generation, but it still takes a very large infrastructure investment, and in most cases it takes subsidies to households, for one, that are going to put up solar panels, or even to industrial to companies that want to generate enough power so that they're essentially making money over and above their own power needs.
Rick, always a pleasure speaking with you.
Well, always a pleasure is for sure, Jim. I thank you for inviting me on.
My guest has been Rick Ackerman, editor of the newsletter Rick's Picks, his website, rickackerman.com. He was speaking to us from Colorado. You're listening to HowStreet.com radio. Find us on Twitter at TalkDigitalNet. Our YouTube channel is Talk Digital Network. Questions for the show can be sent to info@HowStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.